Topic: Subsidiary books. Subtopics: First, meaning and needs. Second, cash book. Third, petty cash book. Fourth, purchase book. Fifth, sales book, purchase return book. Sixth, sales return book. Subsidiary books are those books of original entry in which transactions of similar nature are recorded at one place and in chronological order. In a big concern, recording of all transactions in one journal and posting them into various ledger accounts will be very difficult and involve a lot of clerical work. This is avoided by subdividing the journal into various subsidiary journals or books. The subdivisions of journal into various subsidiary journals for recording transactions of similar nature are called as subsidiary books. Cash book, for all receipts and payments of cash. A cash book is a financial journal that contains all cash receipts and disbursements, including bank deposits and withdrawals. Entries in the cash book are then posted into the general ledger. How a cash book is used. A cash book is set up as a subsidiary to the general ledger in which all cash transactions made during an accounting period are recorded in chronological order. Larger organizations usually divide the cash book into two parts: the cash disbursement journal, which records all cash payments, and the cash receipts journal, which records all cash received into the business. The cash disbursement journal would include items such as payments made to vendors to reduce accounts payable, and the cash receipts journal would include items such as payments made by customers on outstanding accounts receivable or cash sales. Recording in a cash book. All transactions in the cash book have two sides, debit and credit. All cash receipts are recorded on the left-hand side as a debit, and all cash payments are recorded by date on the right-hand side as a credit. The difference between the left and right sides shows the balance of cash on hand, which should be a net debit balance if cash flow is positive. The cash book is set up in columns. There are three common versions of the cash book: single column, double column, and triple column. The single column cash book shows only receipts and payments of cash. The double column cash book shows cash receipts and payments as well as details about bank transactions. The triple column cash book shows all of the above plus information about purchase or sales discounts. A typical single column cash book will have the column headers date, description, reference, or folio number, and amount. These headers are present for both the left side showing receipts and for the right side showing payments. The date column is the date of the transaction. Because the cash book is updated continuously, it will be in chronological order by the transaction. In the description column, the accountant writes a short description or narration of the transaction. In the reference or ledger folio column, the accountant inputs the account number for the related general ledger account. The amount of the transaction is recorded in the final column. Petty cash book. The petty cash book is a recordation of petty cash expenditures, sorted by date. In most cases, the petty cash book is an actual ledger book, rather than a computer record. Thus, the book is part of a manual record-keeping system. There are two primary types of entries in the petty cash book, which are debit to record cash received by the petty cash clerk, usually in a single block of cash at infrequent intervals, and a large number of credits to reflect cash withdrawals from the petty cash fund. These credits can be for such transactions as payments for meals, flowers, office supplies, stamps, and so forth. Purchase book. The recording credit purchase of goods only. Cash purchase or assets purchased on credit are not entered in this book. It is also known as a purchase journal. Invoice book or purchase day book. Purchase book is a special-purpose subsidiary book prepared by a business to record all credit purchases. Nowadays, all these recordings occur in apps, and only small firms resort solely to notebooks or MS Excel. Few things to note are: purchases recorded are only for goods or items related to core business operations of a company, i.e., goods procured for resale. Example, if a grocery business purchases office furniture, it will not be posted in the purchaser's book as it is considered as purchase of an asset and not goods. Cash purchases are recorded in cash book and credit purchases are recorded in purchase book. Sales book, for recording credit sales of goods only. Assets sold or cash sales are not recorded in this book. A sales book is a record of all credit sales made by a business. It is one of the secondary book of accounts, and unlike cash sales, which are recorded in cash book, sales book is only to record credit sales. The amount entered in the sales book is on behalf of invoices supplied to purchasers. A sales book is also called sales journal or sales day book. Purchase return book, for recording the goods returned to the suppliers when purchased on credit. When the goods purchased on credit are returned to the supplier, these are recorded in the purchase return book. Sometimes goods purchased can be defective or of low quality, etc., and hence need to be returned. A separate book is maintained for the purchase return, and these are not deducted from the purchases in the purchase book. Also, purchase return is recorded at the net amount on the invoice. Debit note is prepared for every return of goods. It is prepared in duplicate. The original one is sent to the supplier, while the duplicate copy is kept for our own records. The debit note contains the name of the supplier, details of goods returned, and the reason thereof. Each debit note is dated and serially numbered. Sales return book, for recording goods returned by the customers when sold on credit. When a business sends back the ordered goods to a vendor, it is recorded in the sales return book. At times, the buyer may return goods due to the poor quality of the product, an inaccurate quantity of the product, untimely delivery, or other such reasons. It is also called a returns inward, and an appropriate sales return or a returns inward book is maintained for recording entries related to the same. All returns are primarily recorded in the sales return book unless the returns are not that frequent, in which case they are recorded in the journal.